Good afternoon, everyone. It's Thursday, June 23rd, 2011. I wanted to just take a minute of your time and talk about what I think are the most important charts for today. And I think the most important chart to look at is gold. And the reason for that has to do with this piece of the chart right here you can see with the arrow. And we'll zoom in on that, looking at a 1 month chart. There you can see we have cracked this line. Now, as you know, I think these lines can be somewhat arbitrary, and I think that there is often a tendency to break a line and then have it become a trap for either the bears or the bulls, depending on where the line is. I don't know if this is a trap. I don't know if this is going to rise to fill this gap here, although that could be expected technically based upon experience. However, I think that this is a significant drop for gold. Obviously, the future will fill in the gaps in our knowledge. We'll find out if this gap here will be filled. And, well, you know, it's very difficult to have a lot of certainty with these things, but I think this drop today is significant. And the reason I think that is because we have, if we go to the 1 year chart, we have this lower support line here that gold could easily decline to and still remain in a long-term uptrend, because this, as you can see, in the 5 year chart, which goes back to 2006, is a very long and well-established uptrend. The fact, and I would ignore this line here and this one, but the fact that this line is intact still is bullish, but this is probably an item that could use a little bit of rest. So a pullback would give us bulls more time to acquire, so that's not an all bad thing either. It probably would shake out some of the weak hands, the people who are jumping in it because it became a little bit of a fad. When you get these periods like this chart right here, this part of the chart here, or this part of the chart here, when you have very steep accelerations, it draws a lot of attention to gold. You get a lot of people jumping in, a lot of speculation, driving the prices up. Now we know from some fundamentals that there has been a lot of bank buying, a lot of national buying. Those things are obviously going to create, and it is a buying that creates the bull market. There's no question about it. So we just have to recognize that a gradual bull market that builds its strength over time is really better for stability in the long run. You know, if we look at the silver chart over the same period, you can see that this bull market went bananas. This portion of it here became excessive, and as a result, we've had a retracement of prices from essentially the $50 level, or almost the $50 level, down to the $35 level. You can do the math on that. And if you drill into this, we'll say go to the 3 month chart, you can see that today we did stay above this trend line. We cracked it during the day, but we closed above it. And again, these trend lines are not so exact as to meant to be incredibly precise, but you know, if it drops below this, I wouldn't be the least bit surprised to see silver make a decline roughly equivalent to this distance we see from here to here. Now we can debate, and people will, based on Fibonacci or other technical analysis, you know, how much this drop should in theory be, but it wouldn't surprise me to see this drop transfer to something on the nature of a decline, say either from here or from here, depending what your theory is and how you measure it. But you know, a decline of silver, even to $20, is not going to be the end of the world, because the fundamentals behind silver and gold are still very strong, and we have a very unstable financial environment with the paper money. Which brings us to UUP, which is PowerShares Dollar Index, and if you look at that, the dollar broke the line to the upside. It closed below it. It's very inversely related to the silver. You can see, however, that we have this higher low and a lower high. So we are still in an indecision pattern, and we still have remained below this support line, which has now become overhead resistance. So for the dollar, it would be very hard to call this bullish, because even if we had closed over this sloping line here, We still have not broken this overhead resistance here. So we may chop around sideways for a while, but it certainly cannot be called bullish. And if this can't be called bullish, then it's very hard to be absolutely convinced that the metals are not still in an uptrend. Now, they may pull back to those support lines, and those support lines are rising, but that seems to be still a valid uptrend, in my opinion. I think that's pretty much all I want to show you at the moment. I hope you have a good experience in trading, and remember that the acquisition of physical gold and silver is more like an insurance policy than like speculation. So I hope that you won't expect to trade in and out of the physical silver, and you will accumulate physical gold and silver for your long-term financial well-being.